Hello and welcome to the Daily Market Report from IG. Now, what I think is quite interesting is overnight there's been multiple sources that have said that the US stock market lost ground on the idea that the Fed were going to be tapering its bond purchases sooner rather than later. Now, as I say, that came through a number of different sources. But if I do a sense check on the overnight leads, we have seen the S&P coming off about 0.7%, but every other asset class suggests to me that this wasn't the case at all. If you look at the US Treasury market, there was every reason why we should have seen bonds being sold off. We saw a 35 billion five-year bond auction going away, and the bid to cover was actually lower than the previous auction. Part of the reason why we saw a heavy sell-off on the Wednesday session, but on the Tuesday session, should I say. But last night we did see bond yields coming off very sharply. There was good buying coming through across the curve, and we saw the 10-year yield dropping 5 basis points on the session to close at 211. Now, that suggests to me that people really weren't too bothered about Fed tapering. You can have a look at the US dollar. The US dollar reacted to those lower Treasury yields. We saw the US dollar being slammed across the curve last night, across the G10 complex. Most pronounced against the Swiss franc, though. There was reports out last night, I think it was either the IMF or the OECD, who came out and suggested that the IMF or the Swiss National Bank should look to raise rates because of the overheating property market. So the Swiss franc was heavily bid up last night, which is, for me, a bit of a buying opportunity. I think dollar Swiss longer term is a really good place to be, in my opinion. But the Swiss franc was heavily bid up last night. So the dollar was sold off across the curve. We saw gold rallying as well. The gold rallied and is testing $1,400 per troy ounce as well. Now, that shouldn't happen if the market's worried about tapering. So if I sense check all the different asset classes last night, okay, stocks were down, but every other asset class that should have reacted to Fed tapering did it completely the opposite side of things. So I don't buy that argument at all. But ultimately, we have been left with a negative lead for our market today here in Australia. We're calling the market down 25 points. A lot of that has to do with NAB today. NAB goes ex-dividend. We're going to see about 9 points coming out of the market. So that will be interesting to see how that performs. Certainly potentially one for the dividend strippers. We've been talking about this in our one to watch this week. Elsewhere, it looks like the commodity complex is going to get hit pretty hard. BHP's ADR is pointing down more than 1% at the moment, and everyone's looking at iron ore. We've seen iron ore drop 4.2% overnight. Now that's dropped nearly 30% since the highs we saw back in February. So that's going to be very interesting just to see how that sector performs today, because what we saw yesterday was Goldman Sachs coming out and recommending to clients that they switch out of banks and go back into miners. Now, part of that was down to the valuations we're seeing. They've said that valuations on miners have become very, very low, and the outperformance that we've seen from the mining sector relative, or the outperformance of the banks relative to the mining sector has become extremely stretched, something like 90% over the last few years or so. So we'll see that potentially unwind today, although we don't expect to see massive upside for the banks either. Alcoa was downgraded to junk from its credit rating, so that may have ramifications on alumina today. AWC, we'll have to see how that stock performs a little bit later on today. Elsewhere, the key release that everyone's going to be looking for in the market is the capital expenditure numbers. They come out at 11:30. Now, the really interesting thing for the market today will be the business intentions. Now, I believe that there's a possibility we could see this being an Australian dollar positive story. Just the reason being is that the market is certainly very, very short Australian dollars. I think longer term the Australian dollar does fall. But today I think there's a possibility, based on some numbers we've seen from Barclays, for example, that suggests we could see a positive revision higher to those capital expenditure numbers. And that would be a very positive situation for our economy, given the huge raft of negative leads and negative news we've been seeing from the journalist community of late. So that's going to be a very interesting thing to look out for. Elsewhere, Japan's likely to be down 2.5%, and we're going to look at those weekly flows that we see from the cross-border flows that we see. That comes out 10 to 10. And just look at what the local institutions are doing in terms of buying or selling foreign bonds. And I think that's going to be the key release in Japan today.